ladies and gentlemen, another week and another stock to look at. Obviously, one that I think is worth looking at here is going to be none other than NIO. Obviously, we looked at Tesla not too long ago. So we're going to take a look at NIO in the same sector here of electric vehicles. Obviously, a very emerging industry, one that's worth looking at. So, as always, let me know any other stocks you want me to do analysis of in the future in the comments. Let me know, and I'll go ahead and make that happen. But we're going to go with NIO. I'll tell you a little bit about the company, what to expect from them, what the valuation looks like, and finally wrap it up with some price targets for them. See where we might be able to swing that around there. So let's take a look. So obviously a little bit of brief introduction of what NIO is. If you don't know, if you're looking at this, you might already have an idea, but NIO, obviously an electric vehicle maker that is based out of Shanghai, China. They do all of their business in China right now. As far as vehicle sales and deliveries, it's all done in China. So very centralized in that aspect, and as far as diversity and expansion, they're quite limited as of now. So they have a couple flagship vehicles. Main one being the ES6. The ES6 is their really mainstay vehicle here. Obviously an electric SUV. Statistics, not too bad on a 610 kilometer range. Obviously, they're working on new battery technology to help improve that for sure. And 4.7 0 to 100 kilometers, which is pretty nice. But here's obviously a little trailer for it. But other vehicle right now, the newer vehicle they just launched this year, being the EC6, more of a coupe type vehicle, shorter, similar. It's what I would say is the crossbreed between an SUV and a sedan. So obviously, you miss some of that trunk space, obviously, that you'd have in an SUV, but it's a little bit more sleek in that aspect too. So has been selling really well, actually, in terms of the data. They've been able to nearly match what they've been doing with their flagship ES6, and they also have a vehicle, the ES8, a little bit larger of one. Another pretty decent model for them that's been performing pretty well, but obviously doesn't do nearly the numbers that the EC6 or the ES6 are doing. And then obviously the newest vehicle that they will be releasing here being the ET7, which is entirely their main sedan competition in the market. Here's they're saying, we're going to introduce a sedan to you, and I hope you're ready for it, okay? Obviously, other electric vehicle companies, they're working on this kind of stuff, but really nice features on this car, being obviously you see the incredible stuff there from, that's some good stuff there. 3D heartbeat, a tail light. Their main design here, NIO, their goal is to make obviously a great experience aesthetically, as well as a good environment inside the vehicle. So obviously you see 100% availability up top to look out with this infinity glass window, as well as sunroof, ability to look at everything. That's pretty sweet. So that's NIO for you. Obviously they do business mostly through delivery of vehicles, but they obviously have services from battery charging to battery swaps that they also earn some revenue off of as well. If we look at how this company is valued right now, they're trading at a market cap of $76 billion. So obviously pretty expensive, especially when you think I talked about a company that's pretty limited in where it's positioned at. Price to sales pretty high at 17, and you'll notice no PE ratio nor forward PE ratio on this company because this is not a profitable company at the moment. That's not something that I necessarily find myself too concerned with when you're looking at this, because you have to always take that with a grain of salt with some of these companies. You look at a company like Tesla that just made profitability last year after being in business for 10 plus years. So vehicle margin has always been a big issue with the new electric vehicles coming out. How do you get the pricing right? How do you sell enough to become profitable on them? It's a big process in terms of that, and NIO's working on that, certainly. And you can see as we look at the financials, the revenue has been quite incredible here. You can see the growth, trailing 12 month of 22 22 billion dollars. Not too bad. That's what I call good trailing 12-month revenue, in my opinion. But obviously, you look compared to last year, 16 to 7 to, I mean, these are good numbers here. But one thing we obviously look at is net income. You see, has continuously been a negative line, but you do see some overall improvement here, especially from the EBIT category here, as obviously this is done and not in dollars, by the way, but this is Chinese yen. So just so you know, in terms of billions of dollars, what they're actually doing as far as revenue in the last trailing 12 months, they've been doing in U.S. dollars. You're looking closer to around, I believe it's right around $3 billion. So $2 to $3 billion. So keep that in mind. But you see from this line, the profitability has been showing some improvement. Obviously, great improvement from 2019. And even through a year last year, which was extremely difficult as far as manufacturing was concerned, they were able to pretty well half their loss there. So they're working on progress with that for sure. We look at the revenue over the history. Obviously, this gives you an idea. U.S. dollars here. What it looks like, obviously been in operation since 2019, really. Currently, their most recent quarter, as of March 31st, you're looking at $3.5 billion in trailing 12-month revenue, which is pretty nice. But what I really like to see is the growth here. You can see the steady line. That's what you like to see out of a chart here. Obviously, we had a little bit of an issue in March of 2020, which is not a shocker. This is against a year really where this was prime lockdown for China during this time, so it's not a shocker. But other than that, you see these growth numbers, 139%, 159, 173%. So these numbers are incredible in terms of quarterly growth. The company continues to do great things as far as growth is concerned every single quarter. We're talking about growth of over 100% every single quarter. It's really nice to see. And I don't think it needs to go without saying, a lot of that is just due to the main benefit that the electric vehicle market is quite incredible right now, right? This is a market that's expected a annualized growth rate of 33% from 2020 onward up to 2027. I personally think that's a little bit lowballing it, right? I think most of these estimates they have are a little bit low. I don't think there's any doubt that a lot of people, when they're working on their next car at this point, they're likely waiting for electric unless they're solely set on traditional ICE vehicles. Depends. Some people will be set on that, but a lot of people are going to be looking to go to electric. There's a lot of benefits that come with electric, as well as obviously ICE vehicles too, but it just is going to become a thing where it becomes a lot more normalized. And when a lot more companies are starting to make electric vehicles, people will definitely switch over. I just think in general, this is not a trend that's going away. Electric vehicles will be taking over eventually ICE vehicles, whether it's, and I'm being honest here, whether it's by choice or whether it's forced to by government, because there's a decent chance due to really legislation revolving environmental progress, I can see them pretty well ruling out ICE vehicles in the future. Not necessarily the near future. We're talking by 2030 potentially. So just keep that in mind, as this is a trend that's not going away. So that's the main thing here with NIO. So there's I've talked a lot of positive, and obviously it's worth mentioning the negative too. So one thing I did want to say as far as vehicle feel, because you look at reviews of these, and if you haven't looked at reviews of NIO vehicles, you should look, obviously YouTube, or just in general reviews. There's a lot of great things people say about them. Overall, aesthetically, these vehicles are beautiful. They're really nice. Some of the negatives that you might be able to find, though, is the fact that these vehicles are definitely heavy. There's no doubt these are big vehicles, and they drive very heavy. So it depends on what you're looking for. The vehicles are a little bit larger than you might expect, and the fact that they certainly show their weight, obviously by nature of how large the vehicles are, these are heavy vehicles. So what that means to you, obviously drive feel can be a little bit different, but obviously too they're working on autonomous driving on top of that. But as far as the electric portion of it, overall I see mostly positive things said about NIO vehicles. I've looked at a couple reviews for sure. Obviously harder to find reviews necessarily that are in English for me. Sorry I don't speak Mandarin. I wish I did. Need to work on that. Or Cantonese. I don't speak them. Help me get that. Help me get there, folks. I need your help. Please, go ahead, support it. Hit the subscribe. Hit some likes, baby. I'll learn some of that for that, okay? But we got positive again. Okay, I had to reel it back. I went to the negative. This is just in, all right? A couple days ago, NIO has landed a license to expand into Europe with approval of the ES8. So let's just be clear, it's just one vehicle for now, but they're working on getting licenses into Europe. So NIO says it will deliver the ES8 in Norway this September. So that is pretty crazy. That's crazy. Obviously, expansion is where it's at. And that's where I think NIO differentiates itself. You see a lot of Chinese electric vehicle companies right now. A lot of them. It's crazy how many you see up and coming. But NIO, I think, has a better avenue here for global growth. And I think that's where they're really going to find success. Obviously, they do have a headquarters here in the United States, one thing worth mentioning. So they plan expansion. There's no doubt about it. And in Europe, they have several different headquarters as well. So some of these markets that they can take over, it could be pretty massive for them. You talk about just expansion in general. There's ridiculous amount of growth still in the Chinese EV market because it's really barely even touched the surface. But global expansion is still a huge help on top of that. So this could be massive stuff for them. Obviously, they'll work on getting approval for the other vehicles as well. But that's crazy to see. So it's really nice to see that if you're a NIO shareholder. Sketchpad is what we're opening up next. That's right. I made this myself, okay? I'm pretty good. Here's my price targets here. And this is going to be a 1 year, 5 years well estimate. I'm going to give you a high target. If everything goes well, it's pretty well the high target. My personal estimate for where we're going to be sitting, and the low, which is pretty well the worst case scenario. I like to provide that because, frankly, you need to mention every single scenario possible in the market. You have to. If you're not planning for things that can go wrong, you're not planning right. I mean, you can say everything positive about a company, but you could just have a big streak of just negative, and it could really hamper down on it. I mean, it'll weigh down on the stock, no doubt. So just keep an eye out for that. For my 1 year target, personally, I think NIO is going to be sitting around $50 a year from now. Now, you look at the current share price of $44, that's not too incredible. My reasoning, my rationale behind that being, I think the EV sector still is going to be sitting for a few more months, really stagnant. There's been quite a little bit of stagnation going on lately. But I think that stagnation will continue. I expect a little bit of negativity over the next couple months just due to inflation really too, and I think that will drag down some of these stocks just by proxy, as much as I don't think it should. But valuation is pretty high on this company, right? This is a company bringing in right now $3.5 billion in trailing 12-month revenue. Trading in a market cap of 76 is pretty pricey. I mean, we can't deny that, especially one that doesn't bring in profit. You can't deny it's pretty pricey. So I don't think there's necessarily an incredible amount of upward mobility this year for them. In fact, my high target's only $60, and that's a positive number, all things considered. That's putting us at a market cap a little bit closer to around $90 billion, which I think is pretty expensive for this company. Estimates as far as what they're giving for deliveries as well as revenue growth, it's pretty consistent. We're talking about 100% growth year over year in terms of revenue, still planned to be consistent. So even with that, though, we're talking about revenue this year. Likely, there's a chance it hits right around $2 billion, right? What did I just say there? There's a chance that this year's revenue hits closer to $6 billion, let's say, trailing 12 months by the end of the year, which is not incredible, but it still makes that valuation make more sense, right? So my low target here is going to be $30, and this is given the estimate that there might be a downturn in the EV sector more than there has been already. So if we hear negative news about NIO, and really it's just an overall general downturn, these are the stocks that'll get hit harder, the ones that aren't profitable, the ones that aren't necessarily as high in terms of market cap as a company like Tesla. So these are the ones that'll get harder. Even Tesla's going to get hit pretty hard, I think, if there's an overall EV downturn. It's not typically one or two of these stocks that go down. They all kind of trade together lately. It's pretty crazy. So that's my target there. 5 years out, my personal target is right around $100. So that's putting us at a market cap closer to, it's going to be sitting right around $150 to $160 billion. And obviously that's pretty pricey. I mean, I don't think we can deny that. That's overall annualized growth rate. I mean, the stock will go up around $10 a share each year, which, based on obviously data there, we're talking about good, 10 to 20% growth annualized, which is still pretty nice. But based off of that market cap, you talk about the $6 billion in revenue that they should be doing by the end of this year. If they continue the 100% growth rate, which I'm hopeful they can, we're talking about $12 billion the year following that, 24 the year after that, then after that sitting at $48 billion, which would be sitting right at that 4-year to 5-year range, and then after that being $96 billion. So where you value that, if they're able to keep it up, it's certainly not possible if they're able to keep it up. So my estimate would be closer right around that time. You're talking about a company likely, I'd say they're sitting closer to the $30 to $40 billion revenue range. I don't think they'll be keeping up the 100%. I don't think it's feasible. But sitting at $30 to $40 billion in terms of revenue, for a market cap of right around 150 to 160, I think that's pretty darn fair valuation, all things considered. I don't think it's incredibly expensive by any means. Nor is it incredibly cheap, but I mean, for a company that, depending on growth rate, it could be incredibly cheap. My high target here is being $200. Now that's a lot of growth over 5 years, no doubt. We're talking about the stock 3xing, really 4xing over the next 5 years. Now, how do they do that? I think there's many reasons for it. I think overall, if we manage to keep this area in which we have market caps continue to be inflated on certain sectors, right now EVs getting quite incredible in terms of that, but we're talking about, 400 to $500 billion a market cap on this company, which would be crazy by then if they, that would be crazy valuation. But the only way they hit this target really is by crazy high valuation. So I think if we're able to continue to stretch valuations on companies, specifically in the EV sector, as we kind of have been, and we're including annualized growth rate around 100% each year over the next 5 years, I think that is a feasible ask for them. I think it's feasible. Even if you put them around $50 to $60 billion even in revenue, I know that's not 100% annualized, but if you manage to do that, I think there's potential there. It just depends on how the investors take it. But I give that as my high target, best case scenario. But I do want to mention here, I've got the low. I've got the low at $40. That's below where the shares are at today. This is a worst case scenario, but I do want to mention these investments are riskier, right? This is a company still, they did just hit the $1 billion quarter mark, which is fantastic. They're over $1 billion for a year. But there's no guarantee through financing that this company necessarily always will make it. Now, I did want to say a company like NIO will guaranteed get financing by the Chinese government. There's no doubt about it. So I don't necessarily hedge this as a most likely scenario by any means. It's my low target just because on the off chance that all goes wrong for NIO, there's a chance this stock doesn't move much. And if revenues just fall flat, people may sell out of the stock quick. So you need to consider that. That's what I got for you today. I think NIO overall, I don't think it's a bad buy and hold for the next several years. I really don't. I think the stock's got plenty of room to run, as the EV sector as a whole has plenty of room to run. And it's not bad to have a few plays in the EV sector right now, as it's an emerging market. And I hate to say it comes down to luck to an extent, because some of this we can research, and I feel confident in my investment here. But a little bit in terms of stock price, I think, comes down to luck. I can't lie to you. That's what I got for you today. Hope you enjoyed.